Welcome everyone. Good afternoon. Thanks for joining. We'll start our lesson. Today lesson will go through our LO1 and we are going to start a new unit which is code reporting. And as you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@ukuniversity.co.uk. Those are listening this recording, please, if you like to book one-to-one meeting, you can drop me email as well and we can book, one-to-one if you need to. Okay, we'll start. Please, anyone, any question? Can you hear me?
Yes, I can hear you. Can I ask quickly?
Yes.
Are we going to be able to have the recording?
Yes, sure. I will send you the recording. Normally, Monday morning, they send, all the recording, but I can send you myself as well. So I'll share you this recording, on the WhatsApp group.
Okay. Also, I wanted to ask, do we need to be attending classes, and how often is this class going to be?
We'll do every week, on Sunday, one learning outcome. So every week will be one LO, one learning outcome. We have 4 learning outcome, and today we'll just cover LO1.
Okay, so how long will it be per session?
It's approximately 1 hour plan, but normally we record only 45 minutes, 35
Okay.
40 minutes approximately.
All right. Thank you very much.
Very welcome. Nice to meet you, and thanks for joining.
Nice to meet you as well. Thank you.
Thank you. Okay, we'll start. So please, during the lesson, if you have any question, feel free, we can go through. I'll share with you all resources, all relevant resources. Please, this is if you want to follow, it is ACCA F7 exam paper, which is, the financial reporting. Okay, we'll start. Thanks for letting. Okay. Hope so you can see, first of all, we'll go through the unit specification, what we're supposed to learn next few weeks, Okay, so corporate reporting, which is our unit, which is the unit 1. Please, each week we'll go through one LO, which is one learning outcome, is a 20 credit unit. This subject, today our key focus will be on professional ethics, and we'll discuss about, accounting standard. We'll go through various standards, like IES 1, we'll go through IES 2, International Accounting Standard 1, which is about, how we prepare and record a financial transaction, how many financial statement we prepare in accounts. Second, LO2, IEAS 2, which is we'll go through inventories. Normally we follow first in, first out, and we FCO we're not using anymore, last in, first out method in inventory counting and valuation. Okay, so normally in management accounting we use, but we're not using in the financial accounting. We'll go through IES 7. IES 7 is about the cash flow. IES 10, which will go through International Accounting Standard 10, events and post-events adjustment. We'll go through IES 16. We'll go through IES 36, 38, and 37. That will be all in our discussion. Our discussion will cover, these are the key international accounting standard, those we are supposed to be well aware of, when preparing the financial statements. Okay, so that will be in our discussion. LO2, which we'll go through the next lesson, we'll discuss about financial reporting, different financial statement and framework, which we'll discuss, and we'll go through compare and contrast different reporting and financial performance of different organizations, and we'll discuss, and different entities. So we'll go through lesson 3, which is our LO3. We'll discuss about group of entities like, consolidated group statement, which will go through parent, subsidiary, and associate element, and some foreign adjustments, how we can do and according to accounting standard, because most of the companies overseas business and we are following more international accounting standard instead of more localized standard. Okay, the lesson 4 will be about the interpret the financial statement, the financial ratios we'll discuss, and different interpretation. We'll go through the balance scorecard model as well. So please, each lesson we've been given the indicative content, that's, the key, the points which cover, our overall discussion. So please, during lesson, if you have any question, you feel free ask, so we can do a bit recap on those as well. Plus, I'll share with you F7 ACCA booklet, which normally is quite similar, the course contents, which we'll go through. Or if you want to set up account, you can set up account, which is called Open Tuition, which is uh, most of, the people use this absolutely free for the public. So please, if you like to use it, you can. If you look under ACCA and you look FR, which is financial reporting, so which is quite relevant, and you can download the booklet, which I'll share with you as well. Okay, so please, our LO2, which will go through understand the appropriateness of the financial reporting framework, which will go through adjustment, leases, which will discuss IFRS 16 as well, income taxes, adjustments, fair value adjustment, all will be in our second lesson, which will go through bad debts and how we can calculate, bad debt, recoverable bad debts, and different, the accounting standard. Okay, so lesson 3, please, which will discuss about the group financial statement, associate, parent, and subsidiary. And lesson 3, which will go through all the key financial ratios, and we'll discuss about the stakeholders and micro companies. So all will be in our discussion in the future lesson. Okay, so we'll start. Please, these PowerPoint slides available are Moodle page as well. You can follow, and I'll share with you the recording end of lesson. Often, when the recording will be available, otherwise, our centralized team, our admin office, normally share all the recording. And the recording also will be available previous lessons as well, which is available on the Moodle page. So you can follow on Moodle if you want to go through well before, starting the lesson. So please, all previous recording available and sample assignment available, unit content and the books available as well on Moodle page. So please, you can follow the Moodle. As we'll start. Thanks for joining. LO1 is understand the fundamental ethics or ethical principle. Ethics are the moral principle, which is a crucial as working in accounts, in finance, and member of any awarding body, especially, ACCA, IFA, AT, or any other awarding body. There are plenty of, so we can look around those. Of course, this unit will enable you different accounting standard, how we can, and to meet the different stakeholders. Financial statement always need to be true and fair information content. Okay, so always good to be, you can reflect yourself, how much we know about the financial accounting standard, a scale 1 to 10. Always good to be, and end of lesson, carry on reflecting anything you learn new or anything which we discuss, can we apply in the real world, and always good to be, carry on doing reflection. Okay, so please, which we'll go through, as I mentioned earlier, we'll discuss about, IS2, IS7, IS8, IS10, IS16, 15 revenue, because especially in construction contract, maybe you're receiving the money advance, like say, your construction company, you're receiving all the money into your account, but actually it's not your sales or the revenue yet, because you need to be recognized the proportion of the work you completed accordingly. Because first time when we record the transaction, we can say sales is cash is a debit and sales is a credit according to the debt click, debit and credit rule. So please, you have to proportion it, because it's a prepaid income. It's not income not being earned yet, because you advance received the income. Is actually the liability. Somebody say cancel the project, you have to pay back because you not completed the work, and the sale need to be proportion accordingly. Sales, revenue, and turnover with three terms, three appropriate terms we carry on using in accounts. Okay, so please, IAS 36 impairment. Losses or adjustment, how we can do as need to be impaired, and which will go through provisions, and we'll discuss about tangible, intangible assets, intangible, which of course good. Okay, so please to remember easily and to memorize PPCIO. The word, sometimes very easily we can recognize. Popular people chat in office. So first P, some people are very famous. They carry on chatting in offices. So we can say PPCIO is first P is a professional behavior. Always as accountant, we need not conflicting information. Competencies and duty, we have to do CPD, up to date knowledge, because every year's finance act carry on changing, accounting standards carry on changing, and the legislation. Confidentiality, of course, we not declare the information without the information of the client. We have a GDPR as well, General Data Protection Regulation 2018. Integrity, we're supposed to be honest in the matters. Of course, tax planning is illegal, which we can, and we rely mostly on the information providers client. Okay, objectivity is always true and fair information according to are not investigated. We are, it's our only, we rely on the information whatever the client will provide us. Okay, so please 1.1, we have the assessment criteria, explain the importance of professional behaviors and compliance with accounting standards. So of course, the main thing, the purpose of all these accounting standards, a true and fair financial statement prepare. And we prepare 4 types of financial statements: statement of comprehensive income, statement of financial position, statement of cash flow, and statement of change in equity. So please, and we can look around corporate ethics. Ethics are the moral principle. It's help, accounting policies and principle, nature and economy, the transaction of all the company. We record in the similar manner and we follow the accounting standard. Okay, so all the transaction, those are the material information should be reflect in our financial statement. Okay, so please, profession and professionalism. Professional is a body of theory or the knowledge which is used to support the public interest. So any legislation can be superseded if the public interest, because the public interest is very, very important thing, and professionalism is all about taking action to support the public interest. So we have to be make sure we look around the best to protect the public interest, showing all the information, following the money laundering legislation, the bribery act, and all. Of course, there is, of course, we heard about not like Enron. Enron is one of the biggest scandal. We need to think about the professional can protect it. Like various companies that did order did not really pick the things, and we need to be best interest of the public to protect, because end of the day company, public limited company, is the public owned. Okay, so profession and the professional, which we need to be look around certain essential defining the characteristic of the qualities need to be which need to be taken count. Okay, so member are seen to be acting professionally, literally having a professionalism. They have up to date knowledge. They follow the rules and regulations, and they work in the best interest of not just only the shareholders, but also stakeholders nowadays. Stakeholders, not shareholder only wealth maximization, but so we need to be look around how we can, and we have to up to date knowledge. We have common, the code of value and conduct, which we're supposed to is the duty of society, which we have to promote that. Okay, so accounting standard, please, if anyone any question, please feel free ask them. So we have a financial reporting standard. We have statutory accounting principle, which we carry on following. Different countries have normally now, because of course the company have the operation in other part of the world. A lot of international standard being embedded into the local standard as well, which is quite similar. So couple of sections can be the terminology can be slightly different, but it's better to be used international. And if you want locally, think globally, act locally, you can follow the local standard. Okay, so please, International Accounting Standard Board, International Accounting Standard Committee, they follow the standard after Enron and various other standards. A lot of new standards in process and carry on enhance the transparency. So International Accounting Standard Board conceptual framework set out the principle and the concept, the belief should be like the preparation and the presentation of the financial statement. They need to be true and fair. So we have to protect the interests of all the stakeholders. Financial statement help all the stakeholders to make the decision based on the information which we provide in the shape of financial statement. Okay, so user of the financial statement, generally, the purpose of the financial statement, investors, lenders, creditors, of course, economics resources of assets, these need to be true and fair. Like, if you have the inventory, maybe such as Windows 98 CD, these need to be revalued because Windows 98 CDs, no one is looking to buy now. Maybe if someone buy, their value was maybe 200 pound CD, but now its value maybe is only 10 pounds. So we need to be revalue asset and we need to be do impairment of asset, and we have to record, those losses to reflect true and fair. Going concern, the business will carry on as a normal for seen 12 months, so we have to provide that information. If we think, the company won't be, so we should be clearly indicate. Okay, so all the useful information is relevant. It should have the capable different in the scene include, all the materiality, all the significant information. If like you miss the 10 pound transaction, or if you miss the 10 million transaction intentionally, that is come under the fraud. It's not material. So all the material. So qualitative characteristics, which we'll go through: faithful representation. We need a complete, neutral, and free from error information. Information when you prepare the financial statement is a comparability. Always good to be give the 2 years information if we have running the business. Verifiability, if we are saying we own the asset, is asset on the company name. You have the asset is a resource controlled by entity which flow the future economics benefit. If the asset you have the broken chair, then not meet the definition of the asset, it shouldn't be included in the statement. So timeline of after the end of the year, within 90 days, we're supposed to be after signing off and publish the information on the public domain. Understandability, those people have the knowledge about accounting at the basic, they can understand the information should be shows in the currency and the values and true and fair. That's, really we need to be material, all the material information. We have to follow the Company Act 2006 if you're the company, and the public limited or private limited company, which we have to, and accounting standard, reporting standard accordingly. Okay, so asset, please always good to be, we have the definition, and you can think about liability is a legal obligation arise from the past events. If is the likelihood the case against the company, so you have to think about the condition or the highly likelihood of that if the case will be against your company, and you have the probability you will lose that. Of course, this will be reflected as the liability, and the likelihood, the chance of it is more than 50%. Okay, so equity income. So please, of course, we need to be think about, we can treat them as a revenue, we can treat them as a spend, contribution from owner, which is share capital. Equity in the company we call equity, otherwise we call capital. Okay, distribution to the owners or the dividends, and if they withdraw as the drawing, so we need to be treat them accordingly. Okay, so IAS 38, International Accounting Standard 38, which is about intangible asset, which we need to be think about. We can't see the trademark, the goodwill. Sometimes is the standard guide you. If you're spending the money on the reset, we can't treat as a asset. If is the development stage, like you develop the formulas, you have measure reliably and which will flow the future economics benefit, we can treat as an asset, otherwise we not. But if your accounting equation, if you have the asset minus liability, net asset always equal to equity figure. If let's say 100 million your net asset, and if somebody is willing to pay 150 million, so the difference between 100 and 150, the 50 million will be your goodwill, while somebody is paying you, which is easily we can measure reliable. But internal generated goodwill, sometimes they're difficult to measure reliable. Okay, so please, we need to be think about Goodwill, the business generator at the time through the reputation, the technical knowledge, never recognized as an asset, intangible, which is reasons cannot be measured reliably. That's the key, purchase good, which we can cost minus the value of the asset, and we can look around. We'll go through in the consolidated statement when we'll do our consolidated statement, and we'll go through accordingly. We have the handout is available on Moodle page, which is called Osborne Publisher. And in the next lesson slide, it indicate which chapter and which questions we can look around. Because this is assignment based course, so please we rely more on assignment. We can pick any example. Either please don't use in confidentiality point of view. We need to be any example which obviously you can pick from the handouts, or you if you want to use any client and don't specify which client. Okay, so please research, as we mentioned, the development which we can, if we have a technical feasibility, intention to complete, ability to use or sell asset, and we can measure reliably, availability, adequate technical knowledge, then we can treat as asset. Otherwise, we cannot supposed to. Amortization and impairment asset, which we need to be look around the asset impairment, their value, and reasonable adjustment, which further we look. Okay, so IES 36, which is impairment of the asset, is the reduction of the recoverable amount. Impairment, which we carried out impairment review, annual impairment review, which will carry on reviewing and the value of the asset. If the company do something bad, it can be impact on the goodwill of the company, which is the reputation. The value of the asset is decreased, and it should be reflected because we need to be provide the true and fair information. So what test carrying value? What is meant by carrying value? Asset minus depreciation equal to net book value, or we call carrying value. Okay, it's the recoverable value. If we sell the asset, how much money we can recover? So if the fair value less the cost of the disposal asset, fair value is the sale value, the money you can recover. Value in use, like you have the photocopier, maybe photocopier will print 10,000 or 100,000, depends, the printing. That is the value of the print, is the value in use. And the fair value, if whichever, so we can look around the higher of fair value or the value in use, whichever you can recover amount on the basis of. So if the carrying amount is greater than the recoverable, the asset is impaired. If the carrying amount less recoverable amount, and there we have impairment loss. So please, we need to be think about, and we need to do impairment assets based on this, which we'll go through some questions when we'll do the numericals in the next lesson. So accounting for the impairment losses, of course, impairment is a loss is expense, which we do debit and we do credit our asset. Asset normally is the debit. So please always good to be keep in mind the double entry bookkeeping, and you well aware of. If not, please we can go through some if you want to enhance it yours. So we can say use the word that, and so please we do debit and we do credit. So what we do debit, when increase our expenses we do debit, when increase our assets we do debit, and when you draw something we do debit. When decrease the opposite debit is a credit. When you need to decrease the expense, you have to do credit. Okay, so liabilities, so please income and debit. When these increase we do debit. So, and please always dual effect transaction, debit and credit. So please, when these increase, that's opposite increase is a decrease. When is a decrease, you do opposite of. Any question from anyone, please, if you would like to ask? Okay, so second LO, which second is International Accounting Standard. Third one, we're discussing now, is IS2 inventory. Inventory should be recorded at cost or net realizable value, whichever is the lower. Like if the CDs, which I mentioned, in Windows 98 software CDs, if their value, when we bought it, their book value, and now the sale values sale value is less than the book value, so asset need to be revalued at net realizable cost. So you do at cost or net realizable value, whichever is the lower. Net realizable value, the value of the selling which we can, after sale, the value we can recover. So you should record, because we don't want to give our estimated figure. So as we mentioned, the first in, first out, inventory valuation is allowed, but weighted average also allowed. But if you want to change any method of inventory, the valuation, so please you have to reinstate the previous figure to good comparative figures, because otherwise, if every year carry on changing, it can give you the closing value inventory different. Okay, so provisions, of course, the provision are contingent liability or contingent asset, which is chance of, you look the likelihood, obligation, which we said, liability is the obligation which arise due to the past events. You can measure reliably and estimate, and the chance, then you can should reflect in the financial statement. That's, which we need to be reflect accordingly. The contingent liability or contingent asset will be on the base. Okay, so please we follow the test and we can go through if we can measurable, if we can, other we need to be disclosed in the financial statement if it's a likelihood. So event after reporting, which is IAS 10. So if is the financial statement not being assigned, and if any major which can influence under C, and we need to be make adjustment, and in the financial statement the information should be reflected. If being signed off, we are not going to disclose now, and we can disclose in the next financial year. So that's what we need to be different. Revenue, which I mentioned, with the sales turnover and all revenue, we need to be think about the income, we need to be make adjustment, we need to be think about the sale, and we need to be the proportion of the work which been completed, and we need to be recognized. Okay, so please IAS 16 property plant equipment, we can think about the depreciation method, we can think about the measurement criteria which we can use, the method, the cost value method, the gain or revaluation, we need to make the adjustment uh, in the book of accounts accordingly. So please depreciation, which we can, residual value, the value which we can recover at the end of the, and if we sell, so we can look around the land building. So please, non-current asset register, which is, couple of you already maybe work on it. So we can look around how much was the cost, how much was the depreciation. So we net carrying value at the beginning of the years, which we carry on reflecting separately in the non-current asset register. That's always good to be, and good to be, we can categorize the asset accordingly. Okay, IS 7, which is International Accounting Standard, how we can prepare the financial statement of cash flow. We have two methods, direct, indirect method we can use. How many activities? Of course, we use the operating activities, which is mean the normal business, like a Tesco normal business is selling goods or the consumer goods, but we can think about the Tesco is doing banking, Tesco is doing, so that can be investing, and then dividend, Tesco borrowing money, so we can look around it could investing and financing activities, and the cash flows under these, we can make the adjustment accordingly, because the finance costs, depreciation, if you minus first place in the book, because the depreciation is the non-cash expense, you add it back, so think about the changes in the inventory, trade receivable, trade payable, the last year figure, it impacts the cash flow, then we need to be make adjustment accordingly. So please, so we can look around the investing activities, financing activities, and the operating activity, how much cash increase and decrease compared to the last years, and what is overall effect. The net cash flow under by all these activities, it should be equal to the cash flow figures that given in the balance sheet. So it means reconciliation, which we can do, reconcile. So please, all which we can look around. Okay, we make the adjustment accordingly. So as we mentioned earlier, the 5 professional code of ethics we need to always follow. Please, you need to be make sure you reduce the threats, because those, the compromise self-interest, like if you're recommending, if you're checking your own work, advocacy, if you're giving one client and you have 2 clients and both have the competition, either sometimes it's very difficult to keep yourself and professionally integrity, you can give the advice. So maybe you give advice to her, and your other colleague can give, familiarities. Maybe each other very well, and that can influence and can be compromise our objectivity. Intimidation, if somebody says your job will be risk if we show the right figures. So like in case of the VAT, and we ignore that transaction, and which we can compromise integrity our objectivity in that. So please, we need to be look around these. All the thread leads to compromise the professional code of ethics, and we have to draw the safeguard which will not compromise these, the conflict of interest, advocacy, and all these threads. So please, and then we included the link, please, if you want to look around further, you can. Other than that, it's recommended here, please. So you have the Osborne chapters 6 of the handout, and task 6.3, 6.4 is relevant to we discuss about the ethics and the as accounting standard. Okay, so that's all from my end. Anyone, any question, please, if you like to ask?
Not really. I don't really have a question. I wanted to ask that. So when we finish each module, like you said, there are 4 sessions, then should we then go and do the tax?
Okay, so yes, so in 4 sessions, we will cover the 4 learning outcomes. The 5th session, we do the assignment discussion, how we can address all the learning outcomes, how we can answer the question within assignment brief. Those are given, and how we can complete our assignment. That will be our session 5. And after
5, okay.
and after that, if you have any other modules, of course, we'll carry on delivering. So if you want to start side by side, you can start assignments, and if you like to show, there are already recordings available, which is available on the Moodle page as well. So as quick you submit, normally after assignment discussion, we expect within 2 weeks, if you submit, so we can sign off within next, 4 week your unit, and it means you completing each unit, each module, and then of course, those are required to complete, and then of course you can get your full qualification.
All right, great. Thank you very much.
Thank you, and thanks for joining, and have a lovely weekend. Hope so weather will behave good this afternoon, and hope we'll speak you next week. Thank
All
you.
right then. Thank you. Take care.
Thank you.
Yes. Bye.